The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach do we go, dear friends. And what's going on today? Well, I thought the market was pulling back already. It actually is holding up a little better than I thought it would. We're trading out at 24.94 and change. The volume, though, is that's kind of the interesting part of the day. We're at a little less than 2 billion shares. So finally having a Monday where we're not coming in here with 1.6 or 1.8 billion shares, but 1.9 billion. So a little bit of tick up. Again, we're off 7.5 points. Not a huge end of the world thing, but lost the psychological value. And the NASDAQ certainly led the way on the market up, and it's leading on the way down. I don't see anything that says that many of these will come back. We'll look at them. There are some bigger reasons that I don't think anybody, in fact, I watched TV for the first time today just to see if anybody was actually talking about it, because I saw these things. I said, you know what, this means something, and I bet nobody pays any attention to it. So we'll talk about that in the snooze. As always, when news breaks, I'm here to fix it. And what else do you have? I think that's about it. As always, we like to come to you here at this time.
The following takes place between 2 p.m. and 3 p.m.
And what else do we have? Well, we always got to start off with a little bit of history and then some news. And there it is.
And it's all just a little bit of history repeating.
Well, on this day in 2005, 2 months after announcing its intention to disarm, the Irish Republican Army gives up its weapons in front of independent weapons inspectors. The decommissioning of the group's substantial arsenal took place in secret locations in the Republic of Ireland. One Protestant, one Catholic priest, as well as officials from Finland and the United States served as witnesses in the historic event. Automatic weapons, ammunition, missiles, explosives. Man, they had everything to start a party. Were among the arms found in the cache, which the head weapons inspector described as enormous. And of course, I was over there in the late 90s when this all was still going on. Always kind of looking over your shoulder for the next thing to blow up. And, well, what can you say? Ireland been screwed over by England forever. And maybe finally put an end to it, but kind of nice. It's almost like looking in the rearview mirror, isn't it? 2005, 12 years ago. Seems like 20. You never know. Anyway, we turned to news today. One of the big things that I thought was weighing on the market, even before we started coming in here, was the song and dance and spin about the German elections. The Alternative for Germany party on Sunday became the first slightly right legal immigration party to win dozens of seats in parliament since World War II. If you read the article, it would said extreme right. And it's kind of funny to me because the extreme right in Germany would be kind of a Democrat in a conservative state here in the United States. Anybody that doesn't believe extremely far left in Europe is referred to as extremely far right. But if you read what they have to say, not extremely far right, although that makes good fodder for propaganda. Resistance may come from both Merkel's Christian Democrats, spooked by the surge of their right flank, where the Alternative for Germany entered parliament as the third biggest party, and from the Free Democrats, whose leader Christian Lindner ruled out Germany contributing to a shared Eurozone budget. And that's where you get the shake in the euro. And that is, of course, as I said, Friday. I thought this was going to be the big news over the weekend. Normally, they've gotten the last three elections somewhere around 33% of the, 40% or more of the vote. They did in 2013. They just got 32.5% of the vote. So when you talk about a divided country, these guys are divided three ways. But Merkel's plans for a glorious Europe run by the Germans, since they own 80% of everything, I think is a little washed out, and mostly by the East Germans, who've been around not that long. When they, mid-90s, they reconnected. And so what are they mad about? A little over 1 million people coming in and working under the table, which is very difficult in Germany, because it's had 1948 till now, of that time, with far left socialist people. Now, one of my new neighbors, moved down the street, I'm going to say 6 months ago. I've talked to him. He actually worked in Germany after he got out of the military, U.S. military, and worked over there for the last 20 years. He just came back because, of course, everybody there got canned, and basically a lot of people that came into the country went to work there for a quarter of their salary. So he moved back, and I kind of got the lowdown about what went on over there. He said that, for 20 years, they treated him like gold, treated the workers like gold. Last year, they treated them like the brown stuff. They figured they could just toss them out, get people to come in for them, and work for a quarter of what they were making, mostly all under the table. So I kind of knew the jig was up over there, and people were going to be kind of upset that, he just wanted to destroy wages, just drag in 1.5 million, so a ton of people. And, of course, if you live in the big city, you can't go out in the streets at night because, of course, none of these guys have jobs, and their jobs have become robbing other people, and even worse. And what else can you say? Anyway, German elections, I think, are only going to go farther. My guess is the next election, the AfD actually wins a majority, just looking at the way things go. And the reality to see what's going on over there. But that's, going to throw a monkey wrench in Brussels, in Italy, because these guys now do not have a majority of any kind. And that was kind of the way that they were pushing all the stuff through. Well, no majority anymore, so don't look for a bailout in Italy. Don't look for a bailout anywhere else. And don't look for probably a lot more people flooding into Germany either. I think the door has shut on that. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And what else do we have going on out here? Of course, Facebook off today, too. It's down 4.5% as we speak, 162.81, which is pretty close to the low of day. We also have right now the White House press briefing on the issues with North Korea. So depending on what they say, we might see a little bit more or less hysteria. But on Friday, about 5:15, I saw this roll across. Facebook, when it came out in IPO, doubled down with a proposal that new share class to solidify the co-founder Mark Zuckerberg's grip on the social media giant forever. Even if he sold almost all his stock, shareholders sued, and this time they won. So this has a lot of blowback for many people, including Google, Snap, a lot of other folks. They thought that they could basically have a public company where you own shares but had no votes, and no one else did either. Well, there's a lot of law that says you can't do that. You've got to have a board and a executive office that is responsible to the shareholders. And basically, he just gave up and scrapped its plans on Friday before it was going to go to I think it was going to actually open up either tomorrow or on Wednesday morning, challenging the move. The reason is, one, it would make him look like a jackass, and two, most everybody that I read in the law journals said he was going to lose. This is really, here's the quote, this is really the death knell for existing companies trying to adopt a non-voting share class. Executive director at the Council of Institutional Investors, a nonprofit group that advocates for strong corporate governments. I said how incredibly scary this was for these folks when this was happening a year or two ago, that you didn't really want to be in a company that there was no exit. that the CEO could do anything and go insane in a day, and you have no way out. Now, if you're small investors like us, you can sell in 30 seconds, and then that's it. But if you're one of these big a bunch like CalPERS, you want to make sure that if someone goes nutso or decides to run around yelling and screaming, well, I can think of about 20 things that he might scream, and the whole thing implode and drop in value in 50% of it. You don't want to be in that position where you can't get rid of the guy the next day. And while it will still be hard to get rid of him, the idea that any of these folks at Google or Snap or Facebook will be able to just thumb their nose and empty their nostrils in the direction of anybody that owns shares is a thing of the past, I think. You might be able to fight it and take it a couple of years, but this Ken from the Council of Institutional Investors and a handful of lawyers that I'd been watching this thing kind of make its way through the court, kind of the end of that. And I think a lot of people wanted to be in a company that no one could challenge going forward, thinking it would be better for the long term. But, I think when they gave up on that, everybody's going, well, okay, we might start actually see at least the individual investors kind of think a little differently. And a little counterintuitive here, but I thought that this was kind of a negative going into Fridays, mostly because this was built in that he would be able to defend his company do or die. And now some of these bigger companies will have a bigger say. A lot of people on Wall Street were more than willing to make sure that these guys in the investing community that own these big things like CalPERS could never shake the company up or point out any of its flaws or actually ask any questions whatsoever that might paint Zuckerberg in a bad light. And between him and the rest of the Silicon Valley guys, the ability to be a dictator for life of your company, I think, is a thing of the past. Okay. It's not if you have voting shares. Oh, if you have many non-voting shares. It's the percentage. And basically, these guys made a deal. But everybody else is going to have to make a deal, too, or go to court. But I think everybody's going to probably figure out that this is not something they want to try to go down a road if Zuckerberg can't get it done. Disney is actually kind of flat today. I thought it would be maybe down. It's got a war on with Altus USA, which is owns Optimum and Suddenlink. I think they're big in the Northeast. By the end of the month, it doesn't receive hundreds of millions of dollars in fees to carry ESPN and ABC. Then they're not going to let them out anymore. My guess would be, let them. I know a lot of people with cable want to be able to get direct ABC feeds, but my guess is that they may be able to get an ABC from somebody else and drop ESPN, which is kind of a hot potato already. So take a look at it. 24.94 on the S&P cash, so we'll keep an eye on that. Now, NVIDIA. NVIDIA is down today. A week ago, today on Monday, I sent out a special report where we shorted some things. NVIDIA was not one of those. It was still good, but I warned that NVIDIA may have topped. The reason why is there were a lot of ads over the weekend, last weekend, basically showing that their flagship product, which is called a 1080 video card, was having some massive sales. And if you remember our discussions in August, I told you that I went and you couldn't even find the products on the shelves in Best Buy come August. Well, I went back, and of course, there were plenty of product on the shelf. Now, we're starting to see ads for severely discounted pricing. And again, this 1080 started off at like $800, $799. You could buy it for under $500 last weekend. So you got to know something's coming down. Margins, I would assume the selling price, the wholesale price to dealers like Best Buy. And now we're kind of seeing what's going on. Got a lot of competition from AMD, and we're trying to get as many 1080s out the door and sold, because apparently there's a new 1070 model coming out. This product will be kind of like the 1080, but I'm going to say it's 98% the 1080, and it's going to be brand new, under $500, have a little bit more memory. But if you're looking for a gaming video card, this is going to be pretty cool. The next one, I think they're going to probably do like a 1090 or something that has even more memory and maybe a little bit faster. The TI designation means that they overclock these things. I've got a couple of overclocked NVIDIA cards that I use, but I've been talking about this for a while. You know, the competition's coming. This part is just a response to their video business and video game business, and then of course more competition coming in the near future for machine learning. We'll talk more about this when we come back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're talking about NVIDIA. So, as I said, more competition coming. They certainly got competition on the video card side. If the competition develops in the machine learning part of this business, I look forward to it. Our engineer pipes up and says, well, people are using this in video production. And the answer is, yeah, they are for video compression. But again, that's probably, I'm going to say 20% of the business or less. I'm going to say 50% of the business, let's say 45% of the business is video gaming, and the other, what's left is machine learning. And of course, they've been a one-trick pony in that business, but I think demand has been met on machine learning, so the high may be in for NVIDIA. And of course, competition coming in the gaming keeps margins down, and that's never a good thing for a company that's gone from $20 to $190. What else do we have going on out here? I just thought this was interesting. There's Harvard has bonds, and I never knew this about bonds, but you can buy perpetual bonds, i.e. bonds that literally never go away. I don't know where you would get them, but apparently they have bonds from 1648 from a program to do something on the edges of a river in Holland, and they got 11.5 euros. It was a pretty small bond, but kind of interesting that it's gone through, I think, 4 different currency changes over that time, and the company's never claimed, the country's never claimed bankruptcy, so they actually still have it coming in. Not a lot of money, not for Harvard. 11 euros, probably not going to do a great deal for them, but we talk about 100-year bonds. What is this? 1648? And it's getting on. We're getting on 400 years. So just kind of interesting. Bonds are just refinanced. Yeah, but I mean, literally, could you own the bond forever without rebuying it? Bowie bonds were the way to go. Whatever. I think that's about it. No word on the T-Mobile thing that I saw yet. Maybe there was something and I just missed it. But I was looking for that. Maybe see it tomorrow. Everybody says it's going to happen. So maybe it happens, maybe it doesn't. We're going to get on and start looking at some of these charts and see how things are going. You can give me a call at 877-927-6648. I just heard something. Hello?
Hello!
Oh, I got somebody here. We have Mike from Toronto. Go ahead, Mike.
Yeah, hi, how are you? I'm calling from sunny Toronto. Temperature here is about 95 degrees Fahrenheit.
I flew in there every 2 weeks for 10 years.
Yeah, and it wasn't 95 degrees Fahrenheit, I know that.
No, not always.
Beautiful weather, sunny Florida weather, kind of like Clearwater. Got humidity here. You got to go to the beer store and buy the overpriced beer, to keep things cool. And it's not like, going down to Kroger or Publix or whatever and buying that cheap Budweiser for $9.99, a case of beer. But somehow you got to survive in this heat wave. It's been like this for about 7 days.
The first time I went there, I was told that alcohol abuse in Canada is dropping a drop. So
because we're being taxed to death. Anyhow, speaking of alcohol, I wanted to look at declining NFL ratings. Mm-hmm. And I was looking at how to profit from this because I think we're just starting down in the NFL ratings. I'm looking at Nike because apparently they're a jersey supplier to the NFL.
Yeah.
And what do you think? Like, do you have any other ideas? I mean, how about CBS itself? The company, because don't they televise, or is it just strictly Fox now?
Hard to say. The idea here is that NFL is probably going to get boycotted for a little while. It's going to take a while for them to wake up to the fact that I saw the things in the paper this morning 70% of the people that actually watch the games on Sunday, not just watch the reruns and repeats of what happened in the games later at night or on ESPN, are white males, and half of them have been in the military. So if you're protesting the flag, you're going against your demographic pretty hard.
Okay.
And a lot of people, I can see that now. One of the things that, like I said, I hadn't watched TV for a while, but I did want to watch the Nigerian brothers, because one of them was actually a football player down here in Tampa for the Bucks in the 90s.
He wasn't that good, though.
No, he wasn't that good.
Yeah, I think he had a couple of years on the contract, and then they cut him, or they just dumped his contract or something, and then he got into Mercury Trading up in Chicago.
Yeah, I was just wondering what he thought. And
well, he's bearish. He's bearish, but I watched that segment on the Bobblehead cable channel, and he never mentioned any shorts.
No, he just said that they were insane to let the players basically run the league. And
well, that's what they're doing.
I think that's
they're starting this also in the Canadian Football League. They had a protest this weekend, and by the way, nobody in Toronto watches the Canadian Football League, but who cares?
Yeah. So I was thinking, will these people take it to the grave? And
I figure sports bars are going to take a hit. Okay.
Yeah.
So is there like a nationwide chain of sports bar which are publicly listed on the NYSE or NASDAQ?
Well, the one I was looking at this morning, BWLD, Buffalo Wild Wings.
Okay.
You couldn't find it. Well, it already sucks. This thing is, was 160. Went down to 95. I think it was headed back down there. I looked at this one and I thought, there's faster moves out here in the semis, and I know them a little bit better. But I think this one's a good play back to $95, and maybe even lower. Again, if it went on, I think your thinking is right. These things stink already, much less betting that they come down and that the Goodell takes us to the grave, because I think he's got 1 foot already in the firing box by the owners, because I don't think he talked to many of them before he shot his mouth off. So, it would be
we don't have Buffalo Wild Wings up here in Toronto. We do have the Hooters, okay, but the social justice warriors are trying to close them all down because the ladies wear tight shirts, and tight tank tops and stuff, and they dye their hair blonde.
You know where that started?
They're kind of expensive. They're about 50 to 60 cents per wing here in Toronto. Are they 10 cents a wing down in Clearwater?
They aren't, but the original Hooters, and I've met all the owners since they all started the company down here. At one time or another, I've bumped into all of them.
Yeah.
So
they're not 10 cents per wing in Clearwater.
Huh?
They're not 10 cents a wing in Clearwater, huh?
Oh no, they're probably more like $1. We'll be back in a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollars-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And we had somebody ask me if I talked about the Facebook court case. I will give you the Reader's Digest version again for those people that were late to the party. Basically, they gave in on a lawsuit about whether or not they could have and continue to have all the voting rights, even though that they sold most, if not all, of their shares. And nope, that was it. They kind of threw the towel in. So that means that many companies like Snap, Google, a lot of these guys that had huge moats around their company, whether they sold shares or not, wouldn't have a say. And that looks like that's going away. I think that a lot of people kind of like the fact that there wouldn't be a lot of instigation of big things going on in these big tech companies. And you know, especially the big funds, the people in the traders, the New York guys, kind of pits them against the CalPERS and the other big investment funds that are more interested in these things not blowing up than going to the moon. And these guys being able to, like at Goldman Sachs, to be able to ring the bell when they sell Facebook. And the CalPERS guys are more interested in steady growth for a long time than a dot-com bubble. And, of course, Goldman Sachs more interested in a dot-com bubble, make that money fast. Okay, so we were looking at that. Going to look at a few other stocks out here. Netflix off a little bit, and this follows a theme which I was kind of investigating this weekend, which is after all the brouhaha about the NFL, is the money that these guys are putting into it and whether or not they bought a pig in a poke for streaming rights for sports going forward. And there wasn't much on the way of actual informative discussion about this. Just a lot of people hate this and a lot of people hate that. But I did find one message that was very interesting, and I think it's more to the point for our investing instead of just talking about our political ideas. But it was whether or not sports in streaming will scale. When you make something when Netflix spends something on content that they make for themselves that can be watched all over the world, that's one thing. But if they get in a sport that's starting to decline in the United States, it's probably not going to pick up in another country. It doesn't scale well. And now I thought that was a very interesting argument for all these guys that are like Amazon and Netflix that are looking at taking away the rights to put these games on. But I think at the same time, the price that these guys will pay if the current NFL leaders kind of go to the grave on this thing, which is pretty much a losing proposition if they continue on with this. We already saw the NFL for not the NFL, the NASCAR guys. We aren't having any part of this, and also the hockey guys pretty much, we're not going to get involved with it. But the two big sports really saw a little bit of it in baseball over the weekend. So the question is, does this go everywhere and actually drop the price and or the cachet of sports in the United States, which I thought was an interesting argument. But to me, the bigger one is when you really think about it, does this stuff actually scale outside the United States? The reason why is that Netflix pretty much says that they've grown kind of to the sky. They're probably not going to get that many more customers in the United States. So they need to get customers elsewhere. And if they're spending all this money and not being able to get any more customers, and it doesn't scale outside the United States, I thought that was a very pervasive argument on Netflix and their long term. Anyway, down kind of like the rest of the market. But, would I be short it? I don't think so. If any, even a hint of a bottom comes in, everybody will be all over it. We're at 24.92 on the S&P cash. Yeah, the NFL doesn't scale across borders, even into Canada. I saw the numbers this morning are fairly light, although they're good. But that's about it. Nothing in Mexico. Not big NFL fans. And even though they're trying in England, not doing much over there either. So although it's kind of interesting that they're trying to get that going, but I think that's not going to go too far. So we looked at Netflix. Trip was down fairly hard, TRIP. A lot of these things I'm going to have to dig back into because I think there was some kind of like a lot of these things. There was a little significant news and discussions over the weekend before this market ever started and headed lower. Come on. There we go. Now, C-Trip down, huge volume. There may be a story behind this one, too. I haven't had a chance to check all these out. It'll be a long night. I actually got up at 5 this morning and started looking at this stuff, thinking, okay, am I right to sit on my hands in the short positions? And I couldn't find any reason not to. Anyway, down on fairly decent volume back into this candle for Trip Advisors back on the 9th of August. This went up on 15.2 million shares, just down on 6.7 million shares. So this one actually, might find some kind of buyable bottom, but many are down on volume, certainly significant volume, which means that this thing's probably not going to bounce up tomorrow. To STMP, stamps.com, I saw this one was down earlier, so let's take a look at this one. Again, you can call me at 877-927-6648, or you can also email me at path@tfnn.com. Okay. Okay. Could you make a case in stamps.com? This is an ABC on the way down. I think you can. Energy off this low of 185 on September 5th is not all that exciting. You got a little reversal out here. You don't have that kind of volume yet. Again, I probably wouldn't short it. I think there's ones that look like the wheel's going to fall off a lot better. But if you're looking for a decent pullback in some of these stocks, this could get back to 165 to 170. And that may be a beautiful buy. This thing has a nice pattern, popped up with huge volume of almost 4 million shares on the 4th or 3rd of August. And that would be a nice buy if you get the market to pull back out here and we do see some light volume. Lending Tree is another one getting smacked out here today. So take a quick look at that one. 234.90. This thing really hasn't busted its uptrend line, so I'm not going to get too excited about this so far. This one also doesn't have much in the way of volume today so far either. And about 195 would be kind of nice. Again, these things, there's a few of them out here that look like if you did get some decent pullbacks, these things might be some nice trading ranges to look at out here. This one could get $55 lower, so we'll keep an eye on it. We'll be back in a minute.
Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi, folks. This is Tom O'Brien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of timing the trade. I look forward to seeing all the tigers and tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Hi, folks. This is Tom O'Brien. Come join me next hour as we bisect and dissect these markets. Right here on TFNN. Wow!
And I got an email. What do I think's going on? Well, there's a handful of things going on at once, and why this market's pulling back a little bit. It started leaking out this morning that we'd see the tax bill come out on Wednesday. It already kind of leaked out about 10 a.m., just about the same time the North Korean stuff did, that it looks like instead of having a 20% corporate rate, they're looking at 25. I think a lot of people were disappointed about that. If it becomes true, we won't truly know until on Wednesday. But it looks like Ryan is going to fumble the ball here if that is true. And I think that may have put a little dark cloud cover over this market as we continue to keep an eye on it. But, we're at 24.93, not much movement. Much more important as how we close. I think we had a discussion about that on the air on Friday, but I didn't think Friday was that big a deal, but I thought Monday certainly would be. If we can continue to close somewhere down around here, under 2,500, a little psychological stuff off here, people start talking maybe about a little bit of a pullback, where they want to buy it. That's the kind of setup that, where you get pullbacks much bigger. Also, I have a question if I'm still saying that I was looking for either 20 points higher or 80 points lower. Am I still looking for that 80 points lower to the downside? And I think we still have equal chances of, at any time, maybe 20 points higher for a midpoint correction or a 80 points lower. Although we're, 15 points into that lower already, so maybe another 65 points lower. 24.30, 24.20, probably somewhere in there. So kind of just looking at that, but a lot of stuff going on. I wouldn't point to one single thing out here. This market is as stretched as it's been in many, many, many years. So I'm not really surprised to start pulling back. The only thing I'm really surprised about is how well everything's holding up so far. But my guess is a few more whiffs, maybe a little bit more bad news. As they say, it never matters until it matters. In the meantime, sell when you can, not when you have to. And we'll see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Tom O'Brien has